What's up, Internet? My name's Ian Bloom. I'm a certified financial planner and huge nerd, and for today's episode, we're going to be talking about how to evaluate an investment. The previous two videos I did on this channel and on TikTok are about how to get started investing. They're about choosing your initial investment and then choosing an account type to invest in. But I didn't really talk about the criteria that I use to select investments, so let's look at those. There are three major criteria that I think every investor should be familiar with and utilize, especially when you're dealing with mutual funds and ETFs. The first is the category of the investment. So if you look at any sort of evaluation of a fund, whether it's the fund's website itself or a Morningstar report or something like that, what you'll see is that it'll be called large blend or mid blend or something like that. And that refers to the size of the average company in this stock fund, and whether it is value or growth oriented, or blend stands for both, as in it uses both value and growth oriented stocks. So knowing these categories is important. What we don't want is to have a bunch of different funds in our portfolio that are all in the same category, because then we're not really diversifying our risk. What we would like to see if we're building a diverse portfolio is a large cap fund, a mid cap fund, an international fund, a bond fund, and so on and so forth. We want to have those diverse arrays of investments. The next thing that you'll want to look at are the expense ratios of the fund. Depending on the category, expense ratios can be a little bit higher or lower, but generally in really cost-efficient index funds, you shouldn't be expecting to pay very much. In fact, in more cost-efficient indexes like Vanguard or iShares, you can expect to pay about 10 basis points, which is 0.1 of a percent, which is very, very low, as you might imagine. And so in these expense ratio evaluations, we're not necessarily saying that we only want cheap funds, but what we are saying is that if funds have equivalent performances and are in the same category, we should expect that we would be selecting the least expensive fund. And that brings me to the third thing that I'm usually looking at, which is historical performance. And when I say historical performance, I don't necessarily just mean whether the fund performed well. I mean whether it performed well given the category of investment that it's in. See, in real estate, you might not have expected your investment to perform well during 2008, 2009, and 2010. But what you would expect is that it would perform about equivalent to the other investments in its category, especially those with similar expense ratios, right? So if you can find a fund that's in a category that you want in your portfolio that has a very inexpensive cost and has equivalent performance to most other funds in the category, then typically that is an investment that we're interested in. Now, there are some other things to evaluate that you can spend your time on if you're really, really into investing, but those three things are a good place to start. So I hope that this video was helpful to you and gave you some sense of how to evaluate an investment. And I hope that you have a wonderful day.